Healthcare has become one of India's largest sector both in terms of revenue and employment. Healthcare comprises hospitals, medical devices, clinical trials, outsourcing, telemedicine, medical tourism, health insurance, and medical equipment. The Indian healthcare sector is growing at a brisk pace due to its strengthening coverage, services, and increasing expenditure by public as well as private players. India's healthcare delivery system is categorized into two major components, public and private. The government, that is the public healthcare system, focuses on providing basic healthcare facilities in the form of primary healthcare centers in rural areas. The private sector provides majority of secondary, tertiary, and quaternary care institutions with major concentration in metros, tier 1 and tier 2 cities. India's competitive advantage lies in its pool of well-trained medical professionals. India is also cost competitive compared to its peers in Asia and Western countries. The cost of surgery in India is about one-tenth of that in the US or Western Europe. The low cost of medical services has resulted in a rise in the country's medical tourism, attracting patients from across the world. Moreover, India has emerged as a hub for research and development activities for international players due to its relatively low cost of clinical research. In this video, we will discuss about KMC Specialty Hospitals. Incorporated in 1982, KMC Specialty Hospitals is a multi-specialty Indian hospital chain based in Trichy and hospitals located in Chennai, Hosur, Tirunelveli, Salem and Bangalore. It belongs to the Kaveri Hospitals Group. The company is primarily engaged in the business of rendering medical and healthcare services. With paramount focus on patient care, patient safety and satisfaction, they are committed to offer ideal medical services going beyond the norm of healthcare. The company also has dedicated centers to provide holistic care for women and children in the field of pediatrics, neonatology, obstetrics, gynecology services, and family planning services. Apart from this, KMC has also launched Advanced Liver Care Clinic and Advanced Diabetes Management Centers. With a 300-bed multi-speciality hospital in Chennai, Kaveri Hospital has marked its presence in this bustling capital of Tamil Nadu that is home to 4.5 million people. In keeping with Kaveri's high standards, the hospital in Chennai boasts world-class facilities, top-of-the-line infrastructure, best doctors, and highly trained medical staff who cater to all patients' needs. Kaveri Hospital has come up with a 175-bedded multi-speciality hospital in Salem, located right in the heart of the city. This unit has state-of-the-art infrastructure and facilities to function as a truly tertiary care hospital. They provide patients with services in more than 20 specialties, including cardiology, pediatrics, urology, neurosciences, orthopedics, and emergency care at an affordable cost. They also have 150 plus bed multi-speciality hospital facility in Bangalore, which houses a team of expert doctors located at the heart of Electronic City with easy access from the city and Hosur. The hospital operates at three different places in Trichy, one at Tenur with 250-bed multi-speciality hospital, the other one at Cantonment with 225-bed multi-speciality hospital, and the other one at Heart City with 100-bed facility for cardiac care. If we look at the key statistics, the company is present in 5 locations with 7 hospitals and more than 1,175 beds in total. As of now, the company gives treatment to approximately 5 lakhs patients annually. The hospital has done more than 60,000 kidney dialysis and more than 11,000 heart surgeries until now, and more than 2,000 gastro, neuro, and cancer procedures, each along with joint replacements and kidney transplants. Presently, the company generates approximately 93% revenue primarily from the hospital services and 6% from the sale of pharmaceutical products to its customers, otherwise called as patients. And other source of revenue includes ambulance and scrap sales. In FY23, income from hospital services includes revenue from inpatient services, clocking approximately 87%, and revenue from outpatient services amounting to approximately 13%. Sales growth. It shows the compounded growth in net sales for 1, 3, and 5 years. Its 1 year sales growth is at 32.5%, 2 year sales growth at 18.2%, and 5 year sales growth at close to 20%. In the year FY19, the sales growth was at 70.6 crores, and presently in FY23, it is at 136 crores. Profit growth. Its 1 year profit growth is at 85.6%, 2 years profit growth at 40.2%, and 5 years profit growth at 34.6%. So if we look at the performance, company's profits were at 6.6 crores in FY19 to the levels of 23.7 crores in FY23, which is close to 4 times jump in profits. If you look at return on equity, which is at 31.6% in FY23 compared to 24.4% in FY19. If you look at return on capital employed, which is at 32.4% in FY23 compared to 28.6% in FY19. So both return on equity and return on capital employed looks very good. Debt to equity. Ideally, debt to equity should be lesser than 1. So in this case, the value is at 0.31, which is very good. Price to cash flow is at 48. Just like price to equity ratio, the ratio should be lesser when compared to its peers. Hence, it is better. Interest cover ratio is at 33.7. Normally, interest cover ratio determines how easily a company can pay interest on its outstanding debt. Generally, higher the ratio, better it is. Cash flow from operations from net profit. The ratio higher than 1 is good as it tells us that the company is turning its profits into cash. So on 5 years average, it is at 1.47, which is very good. The hospital also provides medical services, especially for the international patients. These specific services include second medical opinion, diet management, accommodation, airport pickup and drop, and travel desk. The market cap of the stock is at rupees 1435 crores, which means this is a small cap company. Stock PE is at 50.3. Industry PE is at 34.4, which means the stock is overpriced. Return on equity is at 26.7%. Return on capital employed is also at 26.7%. Good to see that none of the shares are pledged. Debt to equity is very minimal at 0.44. Current price is at 88 rupees. Face value at rupee 1. And operating profit margin is at 26%. Promoter holding is at 75%. PEG ratio at 1.64. Price to book value at 12.7. And price to earning is at 52.4. Overall, the fundamentals looks very solid. The company has shown increase in cash reserves year on year. So on cash reserves, we would rate 5 out of 5. Company has good return on equity track record of 27.2% for the last 5 years. So on ROE, we would rate 5 out of 5. Company has shown good profit growth of 32% for the last 5 years. So on profit growth CAGR, we would rate 5 out of 5. Company has also shown good sales growth of 17% for the last 5 years. So on sales CAGR growth, we would rate 4 out of 5. Most importantly, the ownership strength is looking very strong as the hospital plans to increase capex and profitability. So on ownership, we would rate 4 out of 5. The stock is trading at premium valuation at this point. So for valuation, we would rate 2 out of 5. The company knows very well on proper utilization of its assets. So on efficiency parameter, we would rate 5 out of 5. Most importantly, the company possesses stable growth history and manageable debt. So on financials, we would rate 4 out of 5. If you look at the shareholding pattern of the company, promoters holding 75% while public is having 25%. Sooner or later, we could expect the foreign institutional investors and domestic institutional investors to participate in this, as the company's growth is looking very bright. Presently, the share price is trading at 88 rupees. If you look at the chart, it has taken multiple support and resistance at 71 rupees. Since the stock price is overvalued at this point of time, it is good to accumulate when there is any correction. The stock's past 5 years returns is at 422%, and in 1 year it has generated 31.3% for its shareholders. So from a 30-bed trauma and critical care center established in 1999 to 1,200 plus bed multi-specialty hospitals chain operating out of 5 locations with 7 hospitals, the journey has been absolutely rewarding, and with prime focus on patient satisfaction and medical expertise, Kaveri Hospital has been contributing to a healthier society as well as showing good profits, increasing the wealth of shareholders. This is not a stock recommendation, and we request to do further analysis before considering investing. And if you like the content, please do like, share it with your friends, and do subscribe for more such interesting videos. Jai Hind.